Hello everybody, welcome to the March 20th through 21st, Thursday and Friday price action review. So getting started, we are looking at the S&P on the left, the Nasdaq in the middle, and the Dow on the right. We are looking at the daily time frame. And as you all can see, we closed pretty lackluster throughout the rest of the week. So Thursday, we wanted to see expansion higher or continuation, and then a pullback into the range, either later into Thursday or Friday. But as you can see, price just stayed pretty lackluster and consolidative, but that is fine because whenever things like this occur, that usually means good price action or large ranged moves are waiting to form. But going from the daily time frame to the 1 hour time frame, the reason why price pulled back into the range earlier than expected and why the Nasdaq and S&P didn't continue higher is because a sequential SMT between Wednesday and Thursday formed between the Dow, and there was no real confirmation there. There was no confirmation for the reason on price running higher. It was one of those SMTs that just kind of formed, and generally whenever this happens and price holds, this is indicative of low probability price action. And Thursday on the Nasdaq and the S&P ended up closing as an inside day. On top of how to recognize a low probability day is if the London session expands aggressively like it did right here. So while price did trade higher in the morning session of Thursday, the reason why it stopped in its tracks and reversed is due to the fact that this SMT formed. And again, there was no real big signatures on the lower time frame indicating anything, so there's nothing really to review there. But if we look at Friday's price action on the 1 hour time frame, as y'all can see, the 9 a.m. candle, the 9 a.m. hourly candle formed a 1 hour TPD. So as we can see, the Dow created a lower open on this candle, while the Nasdaq created a higher open and the S&P created a higher open. So from this information, we can see that the Dow is the weakest. So it is most likely to run the low of the TPD of candle 2, which as you can see right here, it did, while the Nasdaq and the S&P are more than likely to create a failure swing at this low. So I saw a lot of you guys were talking about how you were getting chopped up and how there were a lot of lower time frame TPDs or PSPs or anything going on the lower time frame that kind of tripped you guys up. The way to navigate things like that and how to navigate low probability price action and to be able to decipher direction is through the order of operations. So I saw some of you asking, even though there's lower time frame TPDs and reversion levels, if there's one that forms on the higher time frame as well, which one do we choose? Well, just like with the weighted probability theories, the higher time frame holds the higher power. So once you have the highest echelon of TPD showing itself, in this case it would be this hourly TPD, then you're looking for number 1, that change in the state of delivery in candle 2, creating the reversion level, which as you can see right here, in the second half of candle 2, we close above the lowest down close candle that formed in the first half of candle 2. So this candle's close, which would be the second half of candle 2, viewing that 9 a.m. TPD through the 15-minute time frame, we can see this close is higher than this candle's open, and you can see on the Nasdaq this candle's close is higher than this candle's open. And why am I choosing this candle in specific? Because this is the lowest down close candle that is a part of candle 2. And why are we ignoring the Dow and not looking for that change in the state of delivery with the Dow? Because it is the weakest asset that is most likely to run the low of the TPD before making the real move, while the other two return into the reversion level, actually creating the failure swing on an SMT. So this would be characterized as the reversion level right here. Now, putting the Dow aside for just a moment, looking just between the S&P and the Nasdaq, as you all can see, we did not really expand price upon candle 3. Now, candle 3 did open up and tag inside of that reversion level and give a run higher, but it ended up trading inside of it one more time before creating the real run. Now, this is something for your notes, and also I've said this before in a previous live stream, but very vaguely brushed over it. So reversion levels can continue holding unless all of the assets break through the highest point or the lowest point of candle 2. So what I mean whenever I say that, we have a bullish reversion level right here. So this would be the lowest point of candle 2. I consider this entire candle right here as a reversion level, but specifically that wick is the sweet spot because as you can see, the S&P traded into the entire candle, while the NASDAQ, being the stronger asset out of all of them, traded just inside of the wick before continuing. If both the S&P and the NASDAQ would have came and broken below this low right here, then I would not want to consider this a reversion level, and I would consider the entire idea invalid. But due to the fact that we left this low right here intact on both the S&P and the NASDAQ since they were stronger, this reversion level is still considered valid. So candle 3, candle 4, candle 5, candle 6, candle 7, however long it takes to expand, any candle after candle 2, as long as price respects the higher low of candle 2, depending on if you're bullish or bearish, then the reversion level is still valid. And what is another characteristic in understanding if a reversion level is valid? The exact same thing I taught you in the deeper dive to reversion levels. So this would be characterized as our original consolidation for the NASDAQ. And then you can see we trade lower, create a first phase accumulation, break down one more time, create the TPD in the reversion level, specifically within the 9 a.m. TPD, which is what I tell you guys to focus on. Price breaks higher, trades back inside of that reversion level, expands from the reversion level, and then what does it do? It closes and trades above this first phase accumulation right here. And after it trades above that first phase accumulation, price forms a fair value gap in alignment with this first phase accumulation, breaks down into there again, tags into there one more time, and then runs and goes for that original consolidation high. So you can see the ideas, even in low probability conditions, they repeat and they work. And for gauging strength and weakness to decipher which one is stronger or weaker, because as you can see, the NASDAQ is the only one that traded into the original consolidation high, while the S&P fell just short of it. So how you could have known to trade this fair value gap right here, or trade the stronger pair, which would be NASDAQ, is looking for small little cracks at the bottom of the range. So here's a little cookie for those that are paying attention. You all can see this wick right here on the NASDAQ and this wick right here. If we were to take the high of this wick and the low of this wick and envision the midpoint and draw that across and look at the actual opening price of candle 3, we can see that candle 3's opening price in the lower time frame opened below the midpoint of this wick, while on the NASDAQ it opened above the midpoint of this wick right here. So this wick, if we were to draw this across, look at the opening price of candle 3 through the lens of the lower time frame, we can see that it opens above this wick, indicating that it's stronger on the NASDAQ, while on the S&P it opened below the midpoint of this wick, indicating it was weaker. And that's why it tagged deeper inside of this candle, which would be the reversion level, before making the run, as well as falling just short of this high right here. So now going back to the daily time frame, due to the fact that we are pretty range bound right now and we are directly in the middle of the range, I don't necessarily want to play guessing games and try to figure out which side of the range it wants to break out at. So we need to see how Monday plays out. Now, gun to my head, I would like to see what we wanted to see what happened Thursday and Friday, which is that run higher and that continuation higher. But don't count on that to be the be all end all, because we very well could trade below these lows right here, form a Kraken correlation, and then make a run higher, or we could just straight up blow through the highs. I don't want to play guessing games, so we need to see how Monday plays out. So our next live stream will be held on Monday. But with that being said, hopefully you found this insightful. Good luck and good trading.